The whole point of setting up an IRA generally is so that you'll be able to save for retirement in a way that takes advantage of what the government gives you as great tax advantages. One particular kind of IRA, called the Roth IRA, actually gives you a unique set of tax advantages in that, unlike almost any other investment, it allows you to get tax-free growth, which over the amount of time you're talking about with an IRA can be huge. Basically, anyone can use a Roth IRA, but the advantages of a Roth are multiplied the longer your time horizon is, because the longer you have until retirement, the longer you get to enjoy that tax-free growth. Because the money enjoys the tax-free growth as long as it's in the account, as long as you don't need it, then it gives the investments inside the account a longer period of time to build up in value, to build the retirement nest egg that you want. The younger you are in general, the more likely it is that you're going to use a Roth IRA. That's actually for a couple of reasons. One of those reasons is the longer time horizon, but another reason is that in general, younger people aren't at their peak earnings yet, and so they tend to be in a lower tax bracket. The question between traditional IRAs and Roth IRAs is that the traditional IRA gives you a deduction up front. Now, the value of that deduction depends on what your tax bracket is. If you didn't have very much income at all in a given year, that tax deduction might not be worth anything. If you're at your peak earnings, on the other hand, that deduction might be worth a whole lot. So another rule of thumb is basically the more that you earn, the more likely it is you're going to want to do a traditional IRA. But the less you earn, the more likely it is that the Roth IRA is going to give you the better value over the long haul. You can have both a Roth IRA and a traditional IRA at the same time. You can divide up the $5,000 that you're allowed to contribute in any given year any way you want between a Roth IRA and a traditional IRA. If you opened a traditional IRA one year, you can do a Roth IRA the next year, or vice versa. The flexibility is yours and is one of the reasons why IRAs make such great ways to save for retirement. If you're looking to open a Roth IRA, you can usually do it at just about any financial institution where you do business. You can get a Roth IRA at a bank. Mutual fund companies offer Roth IRAs. You can also talk to your broker. Pretty much any brokerage company out there will give you a Roth IRA account as well. You know, another reason why Roth IRAs look particularly attractive right now is that if Congress does nothing at this point, everyone's tax rates are scheduled to go up. Basically what a Roth lets you do is it lets you lock in today's tax rates. By giving up that deduction, you basically are paying tax now in order to avoid having to pay tax later. And so even if no further tax cuts ever get done, even if tax rates rise and stay high by the time that you retire, you won't have to worry about it if you're in a Roth IRA, because you'll already have paid those taxes up front, and any earnings that you get from the account will be totally tax-free. Because of that tax-free growth, the kinds of investments that you really want to focus on for a Roth IRA are the high-growth stocks that will give you the most potential for appreciation. In the past, it's been stocks like Apple, like Google, like Priceline, the sorts of stocks that have seen meteoric rises in their value. If you can pinpoint stocks like that before their meteoric price rise, they make perfect additions to a Roth IRA. Again, because you get all of that price appreciation, all of those profits go to you without a penny of them going to Uncle Sam. That's a great situation to be in. In general, a lot of dividend stocks tend to be companies that are more mature, sort of less of a growth aspect in their respective industries. And so they don't have the same growth potential and therefore don't maximize the usefulness of the tax-free appreciation in a Roth IRA. In general, I tend to recommend that people put high dividend paying stocks into traditional IRAs. They give you the same tax deferral, but because you eventually have to pay taxes on them, it makes more sense to go for the high growth stocks in a Roth IRA and leave those dividend payers for a traditional account.